The Federal Reserve did indeed close out 2024 with an interest rate cut, the third straight month with one. Katrina Kaufman reports that people with debt or those looking to get a loan might not feel a big change for a little while, though.
Americans are carrying a record amount of credit card debt and are only expected to add more this holiday season.
That's troubling because interest rates are not quite at record highs anymore, but aren't too far from it.
Matt Schultz from the financial site Lending Tree says when the Federal Reserve started raising interest rates in 2022, the average credit card rate jumped from 19.5% to a record this past September of almost 25%. Borrowing rates dropped with the Fed's last two cuts, but only a little, and this new cut isn't expected to have a major impact.
After taking the elevator up, they're going to take the stairs down. It's going to be a pretty slow process.
That's because the Federal Reserve is still trying to lower inflation. The Fed used high interest rates to try and slow the economy down, but Americans keep spending, and prices recently ticked up. Federal Reserve Chairman Jerome Powell shared the board's projections for 2025. The 19 policymakers predict just 2 rate cuts next year.
As for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market.
The Fed already has a difficult job. One is to make sure the economy is strong enough to have a strong labor market. The other side is it can't be too strong because we don't want inflation.
The board believes inflation could tick up in the coming months before eventually falling later next year. Katrina Kaufman, CBS News, Washington.